Good afternoon. You're watching Business World Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Thursday. Okay, not a good day once again for the index. You have shares retreating for the second day in a row, even sinking to a 1 month low here. Trying to take a look at this chart right now, you have stocks dipping 0.4% to 6,415, matching its lowest point here a month ago at 6,405. Now, earlier in the day, you have shares tanking over 8%. But a last minute buying, as you can see right here, let's try to change the chart here. You see a last minute buying here helping taper off those losses, but the index still ending on the downside. The main factor here still being the pandemic drag, according to Maybank. There's still little hope that the economy will rebound from the record contraction last year. In fact, they have a BSP Governor Ben Diokno on Wednesday saying that the 2-week ECQ and NCR Plus will likely derail economic growth from their previous forecast of 6.5 to 7.5%. He's saying that's likely going to be at around 6 to 7% for the year. But zeroing in on today's drop, Ayala Land provided the biggest drag here for the index. As you can see, Ayala Land, one of our players on the downside here, it ended the day down 2.7% to 32 pesos and 10 centavos. But a number of stocks here is still actually losing over 3% here. The likes of Metro Pacific and Aboitiz Power. Aboitiz Power is a day's worst performer, down 4.9%. But among the gauges, it was a financial counter which provided the biggest loss here. The gauge slipped 0.7%, with BDO and Security Bank edging lower by 2.5% and 2.6% respectively. But BPI here still managing to eke out gains here. As you can see, ending the day on the upside. That's after even it posted a 22% drop in first quarter earnings. Looking at their figures here for the first 3 months of the year, net income plummeted by 21.7% to 5 billion pesos. That's due primarily to tax adjustments in previously booked loan provisions after the Create Law was put in place. Revenues also declined 1.5% to 24.3 billion pesos, with net interest income declining as well by 6.5%, while non-interest income managed to increase by as much as 12%. That's on the back of robust fee income, which saw a 28% climb to 5.7 billion pesos. But on to some other developments here from the country's oldest lender. They are setting their sights on buying Citigroup's retail business in the Philippines, saying that they have enough capital to fund it internally. Recall, of course, that Citi exited 13 markets across Asia and Europe, and that, of course, includes the Philippines. BPI, again, capping off the trading day at 82 pesos and 20 centavos a share. That's higher by 0.1%. Now, despite the less than ideal situation in the local market and the economy, Monde Nissan is not backing away this time from going public. They have scheduled their debut IPO, their record IPO at that, on May 31st. That's after setting public offering from May 17th to the 21st. The SEC has given the go signal for the IPO. Now, 3.6 billion common shares at 17 pesos and 50 centavos a piece, with 440 million shares set for the over-allotment option. They are expecting to net 60.6 billion pesos from the IPO. 26.5 billion pesos of that will go for capital expenditure, while 17.3 billion pesos will be set aside for the redemption of convertible note, and 16.78 billion pesos for loans repayment as well. That IPO, again, said to be the largest listing yet in the country. Now, Maynilad as well, going to our water concessionaires here, Maynilad has confirmed that it has started negotiations for a new concession deal with the government. Now, One News correspondent Shaila Francisco joins us live for more details. Shaila, what do you have for us?
Maynilad confirmed that formal communication with the government has already started and that they have received a copy of the revised concession agreement of Manila Water sent by the government to check whether they are amenable to new provisions. To recall, the revised agreement of Manila Water includes a provision where corporate income taxes cannot be passed on to consumers. That revised deal also abolishes foreign currency differential adjustment, and there's a tariff freeze until end 2022. Maynilad is expecting there will be a fair result of the review. They say the agreement shouldn't start from square one and that investments in the past should be considered as they have staggered implementation of increases since 2018. They are looking to engage with the government via a virtual meeting. While they don't have a target completion, they hope to finish the agreement as soon as possible to jumpstart projects. Maynilad is also throwing its weight behind proposals for the creation of a watershed management council to protect the watershed that affects their stores of water supply. Here's what Maynilad CEO Juan Fernandez has to say about that.
If there's such a bill, we will definitely support because as mentioned already, we cannot do it by ourselves. The water concessionaires cannot by itself handle this huge task of protecting further the watersheds, no? Because as it has been deteriorating and it has affected our operations. It has affected the quality and the quantity of water that we supply. So if there's a bill that will support and fund additionally the watershed management, by all means, we will support.
Just the West Zone concessionaire says that they have started drafting its 5-year plan even while the concession agreement is pending. Among the priorities is sourcing additional supply from Laguna Lake 2 years from now through a third water treatment plant in Muntinlupa. They might also propose another treatment plant in Laguna Lake if depending on the progress rather on of Kaliwa Dam. Jess?
All right, that's something definitely we're going to keep an eye on after, of course, Manila Water's concession deal was approved. This time around, you have Maynilad's at least being processed by the government here, and of course, the water utility. Again, thank you very much for those updates, Shaila Francisco. And while we're at it, might as well have a look at how the parents of Maynilad are performing here and talking about DMCI and Metro Pacific. As you can see, represented by the blue line here in the chart above, you have DMCI is enjoying some gains here. It is up 0.4%, now at 5 pesos and 27 centavos a piece. However, can say the same here for Metro Pacific, represented by the second chart here, the chart below, represented by the orange line. That is down 3.5%, now at 3 pesos and 88 centavos a share. Here are other headlines we're keeping our eyes on. The Philippines expands its COVID-19 war chest as it raises around 122 billion pesos in new debt on its second offshore fundraising this year. The Treasury said 2.1 billion euro denominated global bonds were sold in 3 tenors, 650 million euros each of 4-year and 12-year papers, and 800 million euros of 20-year securities. The bond sale came nearly a month after the government sold 55 billion yen or 24.2 billion pesos worth of Japanese yen-denominated samurai bonds on March 30. The Treasury noted that the latest sale was the government's biggest foray so far in the European bond market. The transaction is expected to settle on April 28. The Calabarzon Wage Board has decided to defer action on a petition seeking to increase the minimum salary of workers in the region by as much as 70 pesos. The petition was filed by the Federation of Free Workers after seeing an increase in unemployment and underemployment in the region. Unemployment jumped to 11.6% in Calabarzon last year from the 6.2% in 2019. Underemployment, meanwhile, climbed to 17.20% from 11% the year before. Since July 2019, the labor group has been filing a petition for daily wage hikes in Calabarzon, yet hearings that were conducted since have been disrupted by the Taal volcano eruption last year and the coronavirus pandemic. And a new study reveals that Manila, the Philippines' capital city, has the third most expensive cost of living among other popular cities in Southeast Asia. Despite the cost, however, the study also found that Manila has the lowest average salary among other cities in the region. iPrice Group released the research on Numbeo, which is one of the world's largest cost of living database. The group found that the estimated monthly cost of living in Manila is at 50,800 pesos, taking into account the necessities like rent, food, transportation, and utilities. Singapore was named the most expensive place to live in the region, followed by Thailand's capital, Bangkok. The study also finds that Manila has the second highest rent prices among the 6 cities, right after Singapore, a developed country that is way ahead of the Philippines in terms of economic development. Now, China's largest property developer has showcased its new electric cars at the Shanghai Auto Show. Bloomberg's Tom McKenzie has all the event highlights, including a Tesla protester.
So I have a question for you. If China's most indebted real estate company is making moves into the electric vehicle market, is that the sign of a bubble? Because that's what some people would say. And behind me is Evergrande and its lineup of electric vehicles. It's got 9 models on display at the Shanghai Auto Show. And again, this is China's most heavily indebted real estate company. They have no history in cars at all. There is skepticism, though, here at the Shanghai Auto Show about the numbers of companies that are not in the car sector that are moving into this space. On the back of record EV sales last year, 1.3 million units sold in China, and that momentum just keeps going. But you do have companies like the property developer Evergrande, but also Huawei and Xiaomi as well, which makes smart devices, hardware and software. They're now moving into the EV space. So there is that concern about a bubble within this sector. Other things that executives are talking about is the continued strength in the premium segment of the market. You have BMW, Mercedes-Benz. They sold record numbers of cars in the Chinese market in the first quarter of this year. Looks like it's going to continue. What else is happening? Well, there is also that debate about the incumbent automakers who are moving in and really making their first imprint on electric vehicles this year. Audi, BMW, Mercedes, again, all coming out with electric vehicle models that could really start to challenge Tesla, that's had a bit of a head start, of course, and they really dominate still the Chinese market. Talking of Tesla, there was a bit of a ruckus here earlier. We had a protester standing on top of one of Tesla's cars in a T-shirt, branding and complaining about a fault that she claims she had with Tesla. She was dragged off by some security, again causing something of a stir at the Shanghai Auto Show. So this is what's going on here. That growth in terms of China's market is there. It's back to pre-pandemic levels, but there is just ever intense competition. There are these companies getting involved in EVs now that have never before had a look in the car world. And there are those supply chain constraints that continue to be something that executives are weighing up.
Now, destruction of the world's forest surged in 2020, even as a pandemic curbed economic growth. Here's a quick take from Bloomberg in time with the celebration of Earth Day. And those are the biggest stories this trading day, April 22nd, 2021. Catch Businessworld Live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.